Welcome to the Revisor podcast, where we highlight the firms shaping the future of wealth management. Today, we're joined by Agatha Johnson and Summer Schimke of WillKate, a firm redefining what it means to serve families with purpose, legacy, and collaboration. Their story is one of heart, innovation, and partnership. Let's dive in.
I was going to start with, I know you've told this story before, but just like this, your journey and story as a financial advisor. You can make it as short or long as you would like, but just kind of the overview of this is how I got started, and then WillKate, and kind of all the way through the journey to WillKate and what WillKate is now. Both sides, the asset management side, the court, the family legacy side, et cetera. So if you're up for it, we'd love to hear your however condensed version of your story as an advisor that you'd like to give.
Okay. All right. So I think the journey when I started was kind of your normal MO of brokers, primarily in the banking industry. And the evolution of that, which was many, many years ago, was really kind of after, this is going to date me, after the Glass-Steagall Act, after all of those things that took place that opened up the opportunities in the banking industries to really share information. So that's kind of where I started, which is a long time ago. So it went from even, doing some of the manual entries of stock trades and things like that.
Okay.
As time went along, it was the recognition that, do I want to sit and be a broker? Absolutely not. I felt there was a lot more to it. And they really weren't interested in doing planning or anything like that, because it really was about sale of products. So an opportunity came to join a CPA firm. So they too were kind of getting in the space at that time. And they wanted to build out their own wealth management arm. And so I was one of the first ones that began to pioneer for them and grow it and build it. And then was there both in the banking world 12 years and then the CPA world 12 years. I think the experience of really stepping and leaning into the purpose of planning, why it's really important, and have an intentional focus on the clients started in the CPA firm, because I was also doing family business transition work and building out their family office. So it was kind of that evolution of there's more than products in the wealth management space. Excuse me. And that was really important. So after 24 years of kind of growing up, I'm going to say, in the industry, it was the evolution of there's got to be more. There's something beyond this. And that's how WillKate came around. And although we didn't call it WillKate at the time, I think as we stepped into it, Summer was the first one shortly after I started the firm. And so we kind of grew and learned together along this journey of, what matters most. And for us, as we kind of stepped and leaned more into the space of what is an actual legacy and how do families view wealth, or how do they navigate and steward and really have a central purpose around it. One of the really important things was we are experts and become specialists in that area. We are not experts and specialists in the investment management, the trading, all of that, model building. And I would say to anyone that says, well, it's kind of easy to use the Vanguards or something like that of the day, if you really want to lean into the wealth management from the standpoint of legacy, purpose, and stewardship, then that is your expertise, and the planning is your expertise, and everything else really needs to be outsourced to some really great people, one that you trust explicitly and that you can work collaboratively together. Because I've been in the space of working with other money managers, but those money managers are very clear on, here's what I've got on the shelf. And I mean that in a kind way, but a very clear and respectful way that that's not how we want to be in the space. And so when we found you guys and the due diligence actually that we were doing and actually looking for was, how can we find someone that is extremely excellent at what they do, but we can collaborate. because each client can be different. Some can be repeatable, but every client, specifically in the family office space or the family business wealth space, they are unique. They really, really are. Their businesses are unique. So that means the liquid portfolios need to be unique in itself. And the ability to do that and collaborate with a group like yours has just been like night and day. And you've also taught us great ways of how to think about portfolios and how to think about tax efficiencies and how you think about capital budgets. That was never in the language of where I came from. So that in itself, I think you guys have elevated us up to where we can now even scale inside internally for advisors' perspective, because we are looking at adding another one. And that means all the difference in the world of, I think, scalability to make sure you outsource what should be outsourced, where you're not an expertise in. I don't want to play an expert. I want to be the expert in what I do, and then bring in the other experts as strategic partners.
Makes sense. Love it. So then if you don't mind, give us a little bit of a feel for WillKate. You've got kind of two different things going on is how I would view it. You've got the RIA asset management piece where we're involved, and then you've got this other side where you're really providing really extreme counsel, family governance services, et cetera, to these really high net worth families. Tell us just a little bit about how did you build that? How did you get into that space and actually, because that's a very unique business. You're the only RIA that we work with that has something like that going on, and it's very impressive. And I've seen when we were down in Sioux Falls, you had a couple of meetings with those families, and we had some conversations, and it's just a really awesome thing. I'm curious. I don't know if I've ever heard you tell the story about how that business actually came to be and how you built that business, because now you've got several families that you counsel in that area, and it's growing nicely and going really well. So how did that all come to be?
Yeah, so I'll tell a quick blurb funniness, hopefully, to it. When I was first asked to do that work inside the CPA firm, it was like, no way. That was my first thought, because that's a lot of emotions. That's a lot of stuff that goes on there. But the reality is about the same time, here's kind of where it launched from. My dad was diagnosed with Alzheimer's at stage 4 upon 6 stages. And it was meaning that all of myself and my siblings have to step back in and talk about what do we do with this generational farming operation that we were 3rd generation already. And by the very nature of doing that work for our family and with our family and seeing all the emotions, because my dad only lived for about 2.5 years after that, it was one of those of the recognition of when money and wealth meets emotions, and the complexities of the systems that collide and clash when we really aren't talking them through. And that experience was an aha moment for me that says, to me, this is my calling. I'm passionate about it because I don't understand why money would ever destroy relationships, but it does because we don't focus on that part. That is very much the behavioral, the psychology of decision making. It's when it becomes really personal. And I think sometimes too, as advisors, we don't always lend a helping hand in that respect, because our client is our client and not the family is the client. So we take the stance of the family is our client, and we understand everybody's situation of where they are, both personally and collectively as sharing assets together, whether it's a business, liquid portfolios, family offices. That is really, really important, because that will unintentionally divide the family away from each other, because they each have competing needs. And so what we felt was the source of contention, we wanted to bring that into the space of having the conversations around purpose, sharing of assets, belief systems, value systems, because that really is what's going to be a driving factor of being a very foundational platform for them to do great things with the shared assets and even their personal wealth. When it came to how does this all work, so that is the Family Enterprise Office side of the equation, which is a separate company. And then we have the Wealth Management and Planning as also a separate company. Intentionality behind that is because they have very different differentiations between what is compliance oriented, what is very much family oriented. So we intentionally separated those two out, even though they're the collaboration between the language and the services that are provided, they are collaborating. And then we make sure that we have outside advisors as well that serve in the space with the family. So it's a collaboration with them as well, because it isn't supposed to be a competing portion and working with families. The family is the driving force. And the collaboration with all advisors is critical.
I love it. I love it. Well, that filled in. I know you've maybe told me some of that story before, but I didn't remember how that, the family legacy planning and stuff all came to be. But you started at the CPA firm. You had the kind of your first taste of that at the CPA firm, and then it kind of came along with you. Okay, awesome.
Yeah, and I think it was interesting because the reason they came to me was because of some of, I talk about natural talent. That was the one thing that they brought up. You have a way with people. And it is sometimes that soft skill set and how your empathy and grace shows up in conversation, and that's why they asked me to do that. And I think their experiences, they saw partnerships divide and collapse because of not having that piece that was really important for people to really walk through and go through. So that was the first experience, and I think when we started at that time, what we call generations and prosperity wealth management. It was that understanding that the parallel process of how we work, meaning you've got technical on this side of it, which is wealth management, which is business planning, all of those pieces, tax planning. And then you've got the other side, which is more the relational component that comes in and the systems that can collide. So building those relationships from a standpoint of stewardship, purpose, and beyond for generations, versus it just being passed on and used. We take the stance of how can you do more with it. So that was an aha moment, and that's how kind of WillKate came around. Specifically, it stands for my parents, and honored them because my siblings were together and as general partner for 23 years. It's now in 4th generation, and we know that systems and processes work when you're building something like that together, because that's a very long view on it.
Awesome. Love the story. So who better to provide this service than somebody that did, went through all of these things with your own family, and then were able to take that experience and really bring it to life and help all of these families with something that's it's hard for them to find help with. Everybody wants to manage their money and all of those things, right?
Right.
There's accounting firm after accounting firm that wants to do their tax work, and law firms that want to do their legal work, and investment managers that want to manage investments. But that service you provide is probably fundamentally the most important to get everybody in line and to keep the family together and have alignment of interest and everything. And it's I think underutilized space. So that's an awesome story. Love it. Well, making a quick transition here into the kind of the specifics around our relationship, WillKate's relationship with Revisor. If you wouldn't mind, give us a feel for what life was like. I mean, I know you worked with some other third-party managers before us, but when we first met you, you had kind of gone full circle, which is similar to my story as an advisor, okay? Yeah. Where you had some third-party managers in place, but then you went out and contracted with Tamarack and had your own instance of Tamarack and had some employees and systems built around there. So if you don't mind, just give us an overall feel of like cost. I was buying this software. Here's roughly how much it costs, and I had these people on my team. your capabilities? What were you able to actually implement and execute versus what you thought was going to be easy? When you talk to the Tamaracks or the Orions of the world, we all buy their software and then they're like, oh yeah, you'll get it configured, no big deal. But as we all know, it's not quite that easy. So if you don't mind, tell us about that journey of WillKate, engaging with Tamarack and trying to build out your own infrastructure without outsourcing.
First word that comes to my mind is painful. So, it's I think in theory sounded great, right? We were using Orion at that time. Justin was really configuring a lot of that for us. And then we also had an intern that very smart, very bright. She stepped into Orion a little bit more. And as we were then realizing that we needed more, because the client was shifting, the type of client that we were working with. From that perspective, when I think about softwares and trying to create some operational efficiencies, when we reached out to Tamarack, there were a couple of things that I really liked. One, I liked that there was a compliance record as to what we were doing, why we were doing trades, and so they had some really great things that they were showing us and how to rebalance, and looking at the tax side of the equation if we do a certain rebalance. So there were a lot of really good things that excited us. I'm like, yep, I'm all in because I am a compliance, kind of a very clear person on that side of it. And so some of those things really excited me about that. The challenge that we had and the real pain points was we created our own models. So we had a group in with us, a couple of advisors, one specific that had, engineering background. So I'm like, great fit to do this on creating models, right? So we did that, and it worked from a standpoint of what Schwab was launching for those institutional trading systems that they were implementing. So we were excited about that, excited to launch with Tamarack, and we had onboarding. And then to your point, it was like, drop. And then now we were on our own, right? And we had to figure out what it was that we wanted, and realizing that, the word or the way it was designed was that open architect, meaning you could do whatever you want. And that's not my forte. That's not where my time should be spent. And I didn't want to become a technology guru and put all my time into that. So we got it set up, but realizing very quickly that something needed to change, because I'm not one that is going to come in and try and configure everything and then realizing the next day I made a massive mistake on it. And so it wasn't pushing us forward as to where we really wanted to go for operational efficiencies, model portfolio efficiencies, tax efficiencies. In theory, it sounded great, but the execution was just daunting. And so, which is where you guys started to come in. I needed to look for someone independent, knew what they were doing, could do this extremely well, and really one that was going to be collaborative and one that kind of creates as an extension of a team. And so you guys popped up when I was doing some due diligence, and Summer and I have due diligence on, because we asked our compliance person, which is also outsourced, by the way, how do you do due diligence on, investment managers? So we had this little cheat sheet that we were looking through. So when I first talked with you guys, as we were talking through a lot of that, to me, it was like you just knew that was really important. So you guys popped up to the top, and it made sense. And then that's how we reached out to you and said, can you help? Because this is where we are.
Please help. Well, no, and that's really interesting, because I had this conversation with a lot of advisors where they know that I'm still advising. So I'm still spending 15, 20 hours a week with retail clients. And they'll basically say, well, wait a minute. You figured out a way to get the Tamaracks of the world configured. That's what you all do now. And they've heard me tell the story that I was the original configurer. And then the first person that I taught is on the call here today, which is Ethan, back in 2016. And so, but what I always tell them is, I said, there's a really big difference. You're planning on continuing to be a full-time financial advisor. I went through something as a financial advisor where I tried to build everything out myself in a system like Tamarack, just slightly different. I tried to build everything out myself, threw up the white flag and said, nope, this is too much. This is too hard. I've already messed things up. I've made trading errors. I've had people make deposits and the money not get rebalanced into their model portfolio. These horrific things as an advisor had taken place. And so then I decided, well, I'm just going to outsource. I'm going to hire one of these TAMPs, right? And so I bring the TAMP in, I turn over all my accounts, or I attempt to, and I find out they can only handle about half of my accounts. The other half, I have to figure out some way to handle them because of some customization need they can't handle, the account's too small, fill in the blank with all of these things. So I wake up one day and go, I'm paying them 40 basis points for half of my clients. The other half, I still have to maintain a license to Morningstar, Principia for research. I still have to maintain this infrastructure because I have to figure out what to do with the other half of the client base and still try to trade at scale. And so as soon as that light bulb went off, that the third party manager that all, and I interviewed all of them, they all had the same answer. They couldn't handle all of my accounts. So I'm like, holy crap, this doesn't work. It's a horrible model to not be able to turn over all of the accounts because of software cost and maintaining operational infrastructure to get trading work done and billing work done and all those things. So I then came back around, removed the TAMP from those half of my clients and said, okay, here I go. I'm going to actually build it now. I'm going to build this out, something that works. And I changed my career path at that point. So at that point, I knew I was going to spend every minute of every week that wasn't working with retail clients, every single day building out this infrastructure and learning how to trade at scale and basically build out these platforms like Tamarack, Orion, Black Diamond, so on and so forth. And I spent on average 20 hours a week, every single week, building out that infrastructure. And so I'll say to the advisors, that's what you're missing. Nobody, the people on the call today, Aggie, you and Summer, you're a couple of the smartest people I know. Every single advisor that we don't have anybody we talk to that's not extremely intelligent. But that doesn't mean that they have the time and energy to actually build all this stuff out. And my recommendation to them is typically, unless you're going to make the move that I did, unless it's your calling, I felt like it was my calling to build out something for RIAs that actually worked from a cost perspective, from a ability to handle all of my accounts perspective, and let me out of this software world completely and out of this trading world, billing world, etc. So my comment has always been, if you decide that that's your calling as well, and you want to start providing services to advisors and you've got 20, 30, 40 hours a week to devote to building that out, then by all means do it. But if not, you're going to be like everybody else trying to spend an hour a week building out your Tamarack instance or your Orion instance or whatever. And the bottom line, it's not enough time. It's not enough time. It's painful. There's a lot of suffering involved. And so I love the story. Sorry I went off on mine for so long. But so now, full circle, you bring Revisor in. Your environment today has changed a lot, right? So we were able to take you, operate with WillKate while you were still in contract with Tamarack, right? So we were able to take and not say, hey, Aggie, you can make this change, but you're going to have to pay us and Tamarack at the same time. We had the skills to come in and say, look, our team will just sign. Compliance is obviously in place. Sign this sub-advisory agreement. Let's make sure we get all of our I's dotted and T's crossed. We got that done. The Revisor team came in, took over essentially your Tamarack instance, configured it, got everything operating nicely. And then when contract came up, you had the choice. Continue to let the operation work that way, or maybe there's a more efficient structure. And in your case, we ended up transitioning you out of your parent instance with Tamarack and onto our parent instance of Red Black Adipar. And now you have your WillKate child instance under us, of which how much configuration did you have to do within Adipar and Red Black? Zero, right?
The thing is zero.
Yes. So if you don't mind, like even on the focusing in on, let's say, cost for the RIA and capabilities. If you were to compare the two very simply, what was the cost structure like for the firm? Because we know in our model, us vertically integrating and doing all the grunt work, the trading, the billing, the performance, the configuration, all that, combined with being the SMA manager and actually building and picking the individual stock and bond portfolios, that was a magical piece for us to be able to bring the cost down to a place that's very attractive. So I know, in our model, us being able to have this very attractive expense ratio for SMAs paid by the client, that becomes a very big win-win, because if they pay 20, 25 basis points for this level of service for these type of portfolios, it's less than they were typically paying for whatever DFA or whatever mutual funds that they were, that their portfolios were comprised of. So that structure that we have, where we've got this synergy and this vertical integration from a cost perspective for you, what does that just real big picture look like? Let's start with cost and then go to capability. Just generically, what does cost structure look like for WillKate now that you're out of Tamarack and everything and into our environment?
I would say from strictly a cost standpoint, one, it's a lot less. And I think it's a lot cleaner, because there's so many moving parts and it can be chaotic from a standpoint of if you have multiple SMAs and you have multiple structures or anything like that. The efficiencies that I brought to the table while lowering a cost is just tremendous. And quite frankly, it actually lowers anxiety. So the perspective and the ability now to be able to focus on the client, which is where we should be in the first place, because that's not what I do from a marketing, or a rebalancing standpoint or anything like that. It just opens up the door to, one, we lowered costs, we were able to get efficient, less chaos, and actually do better for the client, and then grow and scale, in the areas that we want to be in and really do a great job at it. So less cost, less work, a lot more efficiencies.
And then if we focus in on strictly from the client perspective, even though we know most of our clients don't fully understand things like asset location, position optimization, tax management overlay, they don't necessarily understand that stuff, or most of them don't. But they know that they want to be efficient. They want to, hey, I want to play within the rule set. I'll give the government what I have to. I'll pay taxes, but whatever advantages are there for me, I want to take advantage of them, right? And so if you look at it from a capability perspective and what the end client gets, would you say you not only had the lower cost, lower stress, more efficiency, and is that combined with significantly more capability or execution of those tax planning strategies, et cetera, that are able to be delivered to your clients?
Oh my gosh, 100%. Because if I think about everything you just described, if I'd still have that on my plate, which makes me shudder, after having it on my plate, there's no way I can really grow, and nor can any other advisor that's at WillKate grow, because your head's in too many spaces.
Yes.
And if I want to be the expert in investment management, then that's where I should be. But that's not where I am. And for me and for us, the only way we can grow and really get better at what we do is by utilizing your expertise and your operations and your efficiencies. The ability to reach out to Nick or you, Landon, or Ethan, and talk through a case, or here's where we are shifting gears on who our clients are, our target clients that we want to work with are. You guys to be able to step in and just say, well, let's kind of think through that. How do we do that, right? That in itself just is priceless. And the efficiencies that you guys brought, lowering of costs, and the ability to still do everything that you described, tax efficiencies, capital budgets, all of those things makes all the difference in the world. And I will say, our clients, they know who you are. We have no problem saying, this is who we work with. We love working with them. Here's why. And they love the story. And you have met some of them. We brought you into some of the client events, and they like that. They like that there's an extension. They like that there's another person out there that's really thinking through some of these things. And really from an efficiency or succession planning standpoint, that's priceless as well.
Love it. By the way, when you have another client event, let us know, because we'll come out again and meet everyone. But that leads me to, we've had some internal, this is the last question on my list. We're not in a hurry, so happy to talk about anything else. But we've had some internal discussions recently. We always like to kind of play devil's advocate. I pretend that I'm you. I pretend that I'm one of our other advisors, and I go, what would be missing? We fill all these holes. One of the things that came to my mind the other day, we have a couple of local firms that we work with. We're in Northeast Ohio. Most of the RIAs we work with are all over the country, right? West, east, all over the place. We do have a couple that are local. And in those couple of local relationships, they will ask an Ethan or a Nick to come into the office when they've got maybe a client that's a larger client, that's got some really detailed questions about their portfolio, and they're wanting to do an intense portfolio review. They'll say, hey, which one of y'all is going to show up and help us with this meeting? And we're 15 minutes away, so we physically go there, okay? So what we were talking about recently was, well, we've got a solution for that, but it's remote. And we were like, how awesome would it be as we grow to be able to have, because this would be the end goal. I don't know that it's going to happen overnight, but the goal would be, as we grow nationally, is to have somebody in each spot that can actually physically be there. But right now, that's not the reality. So how do you feel like it's gone with us being remote and filling that void? Because most of the advisors we work with, when they outsource their portfolio management process, it creates this little gap, which is they're not the one that's picking everything and doing all of the work all the time. So they've got access to performance data. They can see everything that's going on. But when specific clients are coming in to really get into the weeds on, why did this account not perform as well as this one? Or why did something happen with my portfolio? The advisors that we work with are usually not comfortable being on their own in those most of their meetings. It's like, we don't go too deep. It's very general. I'm comfortable. But there's always those handful of clients, or the one that calls it specifically is maybe a little upset about something, or they're concerned about something. How do you feel the execution has gone where we're dialing in remotely to those meetings for you, as opposed to being, I think you would prefer that we physically be there if that were possible. Has it been a feasible solution and at least got the job done for us to be there remotely as opposed to physically?
I would say 100%. In today's world, because a lot of our clients are remote. Even they're not all in South Dakota, right? They're in Texas and Minnesota and North Dakota. I got to think where they're all at, Florida. So they understand remote. I don't see a hindrance by doing remote. I think it's more efficient. It is not less personable, because it still is about the ability to pick up the phone and talk to your client. It is really no different. If I have all my clients, let's assume in South Dakota, and you guys are remote, I still feel that at the end of the day, if we can collaborate, no different than we are today, on a conversation, you continue to build that relationship out. Virtual should not have any impact on the relationship or the ability to really talk through what the client wants to talk through, because it's worked for us.
I love it. So the without saying specific names and whatnot, there's been a lot of client meetings where either portfolios were transitioning or a review or whatever, and we jumped on the Zoom call, we answered questions, we did our thing. But normally you would hang up the call and then we wouldn't be on, at the end of the conversation. But in general, you would say they've gone well, we got the job done, they were happy, you were happy, everything worked out great.
Yeah, and I think it was interesting when we first started with you. You mentioned that not a lot of advisors really want you in front of the client. And for me, I'm the opposite. It's like, these are the experts. Here's a team that is a much larger extension of us. And they like that. They want somebody specifically in that area. And the way you're building it out, to me, is just going to bring even more and more, great advice, great opportunities for us. And as I think about, as we really begin to launch and build out the family office even farther yet, they like that. When you get into that space of high net worth, ultra high net worth, they don't want just one person. They want a great team. And that's how I look at you guys. Because if I can talk to Ethan or talk to Nick or say, 911, I need help right now. They're like Johnny on the spot on that. And I admire that, because that speaks to how we want to be with our clients, or even a situation of, whether it's, one that's concentrated positions, the ideas you guys brought to the table were tremendous. Or in the case of, we have someone beginning to exit and sell their business, right? They're anxious right now. So doing baby steps and even being able to plan with you guys and say, let's take this first 3 months, here's what we're looking for. And as we navigate through, we know that as the business is sold, they're going to appreciate, which is what they said to us, the ability to kind of slow down, think clearer on this, and have this team surrounding them so they are comfortable.
I love it. Do you feel like, I know that this is what we try to do, but now that we're having this conversation, I'd love to get your feedback, just live feedback. Our goal as an outsource provider is we want the firms that we work with to feel like we're somebody that's down the hall that they employ, that's on, that gets a W-2. And even though we're not actually down the hall physically, we created our model was created with that mindset, because we've had so many not great experiences with outsource providers. And the main thing that made it not a great experience was their overall mission was solid. I had admiration for it. They had great goals. I go, yeah, you're right. I don't need a full, 100% of a marketing professional. I need like 1/4 of a marketing professional. I need 1/4 of an HR professional. And so we would bring on these outsourced relationships where it solved a problem for us, kind of, which was, we don't have enough cash flow to hire a full person in all of these little domains where we only need 1/10 of a person or 1/4 of a person. So it kind of solved the problem. But what they forgot to tell us was their availability doesn't match reality that's needed by the firm. So they go, we're your outsource provider. We do your thing. We solve all your problems. And then we go, wait a minute. We reached out to you with something urgent. We had to have a solution to that day. This was a big deal. Something bad was going to happen if we didn't get your support. And you scheduled a call with us for a week out. If you're really doing it properly, if that's my employee, I'm yelling down the office, I need you down here now. We've got to get this figured out. And our goal has always been to create that same feel with our team, where you've got our cell phone numbers, you've got the ability to contact us in any way, shape, or form you like, and we want to react like we would if we were on W-2 wages with you. Do you feel like we do a good job in that area? Could we improve? How has that side of the outsourcing relationship gone for WillKate?
I would say this, it has not been a good job. It has been an awesome job. I would change that word out. And here's why. The knowledge that you guys bring to us, I don't have the capacity to have the depth of knowledge that you guys do. I can theoretically assume I do. Worked with tremendous and really good, SMAs or, outsourced money managers, but I cannot pick up the phone and say 911, right? It's not happening. One, I'm not going to get a hold of them. And it's more about off the shelf, here's your model portfolio. Or to your point, Just a minute. He might have some availability in a couple weeks. Maybe. That's a big maybe, by the way.
Yes.
Versus Nick has pretty much saved us this week in so many ways already, which is awesome. Ethan, I know your plate's getting fuller, but you are still always available, and so are you, Landon. That's what makes it unique. And what you guys are doing, and I'm not blowing smoke. This is like 30 years of experience sitting here that says this, what you guys are building out, works. And I think personally, my recommendation is every advisor that wants to grow, this is what they should be doing, because they want to work with someone that's team-oriented, collaborative, smart, knows what they do, and they do it really well. And the clients, our clients, appreciate it greatly.
Love it. Awesome. Awesome. Well, that was all the questions and everything that were going through my mind. You are a great interviewee.
That was Aggie Johnson and Summer Schimke from WillKate, proving that true wealth is about people, not just portfolios. Thanks for listening to the Revisor podcast. If you enjoyed this episode, follow and share it, and stay tuned for more stories of purpose-driven advisors making an impact.